Hello, in this video, I'll show you the best and easy 1-minute scalping strategy for trading stocks, forex and cryptocurrency. So stick around till the end of the video to understand this strategy. Scalping is a trading style that specializes in profiting off small price changes, hence making high volumes of small profits. Many traders tend to forget that when scalping, you need to have a very strict exit strategy because one large loss could eliminate the many small profits you had worked so hard to earn. As a trader, to be successful in scalping, you need to have a much higher ratio of winning trades versus losing ones, while keeping profits roughly equal or slightly bigger than losses. Scalping trading strategies generally use real-time technical analysis to make small and frequent profits by skimming a few pips from each trade. Since trades are executed within just a few seconds to minutes, the ideal time frames for scalpers are typically 1 minute and 5 minutes. When scalping, you are required to have quick responses to market movements and an ability to forego a trade if the exact moment is missed, so there is no FOMO, which is simply fear of missing out. Chasing trades along with lack of stop-loss discipline are the key reasons that scalpers are often unsuccessful. The idea of only being in the market for a short period of time sounds attractive, but the chances of being stopped out on a sudden move that quickly reverses is high. That's why I'll show you these two effective methods I use in my scalping strategy. First, we need to know what is a zigzag indicator. The zigzag indicator is used to plot points on a chart whenever prices reverse by a percentage greater than a pre-chosen variable by a trader. Then straight lines are drawn connecting these points. This indicator is also used to help in the identification of price trends. It attempts to show trend changes by removing random price fluctuations. Zigzag lines appear only when the price movement between a swing high and a swing low is greater than a certain percentage, usually 5%. The indicator makes it easier to spot trends in all time frames by filtering minor price movements. This indicator is often used with the Elliott wave theory to determine the positioning of each wave in the overall cycle. One can experiment with different percentage settings to see what gives the best results. For example, with this strategy that I have backtested, a setting of 4% may define waves more clearly than a setting of 5%. Although the zigzag indicator does not forecast future trends, it can assist in identifying potential support and resistance zones between plotted swing highs and swing lows. Reversal patterns such as double bottoms and double tops can also be revealed by zigzag lines. When the zigzag line changes direction, traders can use popular technical indicators, and in our case, we will use the Relative Strength Index RSI to confirm whether the price of a security is overbought or oversold. To understand more about RSI indicator, you can check on my video which I specifically did on the RSI indicator trading strategy. On the pound card 1-minute chart below, we have our RSI indicator and the zigzag indicator by Lucene NB, and just a reminder, I don't own any rights to the indicator, I'm using it for educational purposes only. Initially, we can observe the market being on a ranging mode, but with our strategy, we strictly rely on a trending market. So we wait until the market starts to trend. We can see a lower low point in that area. We wait for a higher low point to form for us to start anticipating an uptrend. Higher low point is formed on that area, and later a higher high is formed, breaking the previous lower high, and this market structure confirms an uptrend is in place. To take a trade, we need a higher low area for our entry, of which it's formed in this point, and when we check on the RSI indicator, it's on the 40 area, which is usually a support area. These two confluence signals confirms our strategy requirements, so we take a long position, putting our stop loss just below the previous higher low areas and target a 1:2 risk to reward ratio. We exit our trade when a higher high is formed and wait for another opportunity to enter into a trade. On the chart, we can see another higher low area forming, and the RSI is on the 50 mark level, which is still a support area. So we take a long position targeting a 1:2 risk to reward ratio, putting our stop loss below the previous higher low and exit our trade when a higher high area is formed. We continue scalping the market whenever we get higher lows and higher high areas. When we break the market structure, and in this case, when we get a lower low and a lower high, we stop scalping on the upside and start looking for the sell opportunities on the downside, using the same strategy, but in this case, we will be selling on the lower high points, putting our stop loss on the previous lower high and target a 1:2 risk to reward ratio. Watch my next video on RSI indicator trading strategy that top traders use to get more profitable in your trading journey. If this video has been helpful, remember to like, share, and subscribe to the channel for more future content like this. Till next time, see you.